Okay, good evening, everybody. It is Friday night, October 14th, 2022. Thank you all for joining on this glorious Friday. Now, I've been on a little bit of a hiatus these past 3 days. Been extremely busy at work. A little bit run down here, if you couldn't tell, but feeling better. So, a lot to talk about. A lot has occurred this week on Wall Street. Obviously, this week was the major kickoff of Q3 earnings. So we are going to be talking about a lot of the investment banks that reported. Specifically, we will focus in on JP Morgan Chase, Morgan Stanley, and Wells Fargo. Now, I think as we move along through the stream, one of the things you'll notice is that as we're touching on each individual specific bank, one of the things that I really wanted to focus in on as it relates to Wells Fargo is their exposure to the housing market. So if you think about the big banks, Wells Fargo by far has the most exposure to home loans and lending and refinancing. So we're gonna see if some of our theses play out as we've been predicting on the streams of not only lower investment banking fees across the suite of these banks, but as it relates to home origination loans, mortgage loans, and refinancing. We've predicted a little bit of let's say a decline in revenue, and I think we'll see that some of our positions or some of our thoughts have come true there. We're also going to touch on CPI. We had a pretty egregious inflation reading. Now, the interesting thing is that core CPI, as well as that headline number, came in hotter than expected. Now, many economists on Wall Street thought that that headline CPI number was actually going to come in a little bit lower than previous months, obviously due to decline in energy prices, but it seems as if headline CPI as well as core came in at a pretty big surprise. Now, one thing that really caught my attention as it relates to core CPI, obviously core excluding very volatile food and energy, but shelter costs were up quite substantially. I mean, on a month-over-month basis, we're talking about 0.7%. On a year-over-year basis, we're talking 6.6%. Those are big moves, very concerning as well. So we'll talk about that. But quick to really recap the market action on Wall Street today. The NASDAQ Composite dropping about 327 points to 10,321. The S&P 500 falling about 87 points to 3,583, and the Dow Jones Industrial Average following lower at 403 points, finishing the day and the week at 29,634. So I would like just to say, please excuse my voice for this particular stream. I've been feeling a little bit stuffy, a little bit run down over the past couple of days. Work has been crazy. So I just wanted to quickly apologize for that. But that's really all I got. So let me close up my computer and we will start the live stream. It's good to be back, and hopefully you all had a great week and even better plans for the weekend. So let me pack up here and we will go. I see Christian Suarez, good to see you. Ken Glass, DWG. So I guess it's would be helpful to tell you guys where we're reporting live from. This is the 57th Street WeWork building. Now, I'm not sure if I've ever taken you guys to this particular floor, but this is the 11th floor. It's sort of like the communal area. So even though WeWork does have individual office space, I always think it's kind of cool to work out of these sort of communal spaces during the day. There's a lot of people here that work on smaller startups. So it's kind of cool to, network with some smaller entrepreneurs. Very cool. But let's head down. We're gonna go to the lobby. This is the 11th floor. But let's see who we have in the chat, and happy Friday, everybody. I see Austin City Limits, the one and only Vonda Howard. Good to see you. Gregory is here. Sunshine After Rain. I see Chad, the LT Prod, Felix, Rafed, Big Task at Hand. Good to see you. Welcome. Who else we have? Lonnie, good to see you, Lonnie. Charlie Richardson is in the house. When the internet doesn't go out here. All right, hopefully we don't have any internet issues. All right, we are in the lobby now. Just give us a minute to head outside. Hopefully it's not too cold. Let's see. All right, so we are now street level here in Midtown Manhattan. This is 6th and 1/2 Avenue and 57th Street. So we are right here on Billionaires Row. I see Vinny Castellano is here. Hey, Vinny, good to see you. And please extend my regards to Maria Castellano as well. Hopefully you guys have a fantastic weekend. I see Shadow Ship. Cynthia Martinez, Abdullah, Paulette, good to see you. Tom Barry, Felix, Omar, happy birthday, War Walker, and Otto. Steve, the bond trader from New Jersey, Sunny D, welcome everybody. So here we are, Billionaires Row, New York City. Now, it's a little bit chilly out. I think it's like 55 degrees. It's supposed to get all the way down to about 48 degrees tonight. So we are dressed appropriately, have my hat on. So just to give a quick recap, because we've been on about a 3-day hiatus here. This is the official start of earnings season. And we have started off with the major banks. We heard from Jamie Dimon's organization at JP Morgan Chase. Interesting things to talk about there. Morgan Stanley reported earnings, as well as Wells Fargo. Now, as we know, Morgan Stanley doesn't have as much traditional exposure to the, I would say, the consumer or retail side. Morgan Stanley tends to specialize in investment banking services, as well as wealth management for high net worth individuals and ultra high net worth individuals. And pretty much across the board, no big surprises, especially considering from the things that we've been talking about, right? Now, if you guys remember the past couple live streams, we've been saying that investment banking revenue is probably going to fall off a cliff across the board at all these major investment banks. And I don't think that's necessarily due to the specific, business failure that as it relates to these investment banks. It's just that deal flow and deal activity is substantially down. And we've sort of talked about why. Once the COVID crisis happened, the Federal Reserve essentially flooded our system with liquidity, drove interest rates to zero. So 2021, I would say the latter part of 2020 going into 2021 was an absolute record breaker for IPO activity or initial public offerings and just M&A activity in general. So one of the main ways that investment banks make money is off of the advisory services or equity underwriting. So if you think about the fact that IPO activity is down 99% year over year, well, we can pretty much guarantee that investment banking revenue is going to be down substantially. And that's exactly what we saw at JP Morgan Chase and Morgan Stanley. I think across the board, they've taken about a 50% haircut in investment banking revenue alone. But we'll do a little bit of a deeper dive. Hey, the ABX girl is here from Raleigh. Good to see you, the ABX girl. You know, let's actually head up to 58th Street. Right here, this building is the very famous New York Athletic Club. I'm not sure if any of you have been in there. Wow, Jay's like it's going down to 39 here tonight. Jeez. You know, this sign here says it's 66 degrees, but I'm not buying that. It definitely feels a little bit colder than 66. Maybe just because the sun is down. I see Roy S. Good to see you, Roy. Christian Suarez. So this will be 37 degrees to 40 degrees here in the next week in South MS. Cynthia Beal, good to see you. You know what, let me show you guys this. We never come to 58th Street. But check out 220 Central Park South tonight. That is a beautiful looking building. Hey, the Mighty Bull is here. This is shout out from New York, TGIF. Hey, thank you so much, the Mighty Bull, for your generous donation. I appreciate it very much. Hopefully you're doing well and have some good plans for the weekend. So thank you, Mighty Bull. Appreciate it. You know, I actually might have to put up my hood because it is rather chilly out tonight. You know, let's attempt to walk down 58th Street, because usually there's some dead zones here, some dead spots. I see Julia M, good to see you, welcome. So I think the overarching theme now, obviously we haven't been streaming for the past 3 days, but after we got that initial CPI reading, or that initial inflation report, markets really took off and we had a big rally day on Wall Street, but we've pretty much faded that entire rally today and pretty much closed at the dead lows. Some of these stocks actually closed lower than their previous week's close of last week. And I think a lot of that is just from short covering. You know, if you look at some of the order flow here, you know, you saw that very, very little of that rally activities, I would like to call it, was due to net new buying. It was more sort of repositioning and short covering. And a lot of these weekly charts I've been going through, you know, as of market close today, a lot of them look really, really bad, like substantially bad. Now, the thing that's concerning me the most, and we've talked about this before, is that we finally got a solid close, a solid weekly close on the NASDAQ composite and the Dow Jones Industrial Average, closing below their 200-week moving averages. Now, the NASDAQ hasn't closed below its 200-week, as we're looking at 220 Central Park South. NASDAQ hasn't closed below its 200-week, well, solidly below, since 2008, the financial crisis. And the Dow Jones Industrial Average briefly closed below the 200-week during the COVID pandemic, but then we've rallied right back above the 200-week once the Federal Reserve started to buy bonds very aggressively, flood the markets with liquidity, and also pretty much cut the Fed funds rate to zero. But now we have quite the opposite. We are closing below the 200-week in an environment where I guess we could pretty much be blunt and say that these rate hikes are not working. We saw headline CPI as well as core CPI come in above economists, analysts' expectations. And we're in a period of prolonged quantitative tightening. So I think if we sort of keep in the back of our mind that I think on November 4th, right? Is that election day or is it November 8th? I think it is November 8th. So November 8th, 2022 is election day here in the United States. That is when we will be doing our midterm elections. So if I just had to take a stab at it, and since it's Friday, I guess I'll just give my sort of predictions here. I think we're going to see a pretty aggressive sell-off into midterms. And I think, maybe a good headline going into the end of the year would be, the S&P 500's worst performance in an entire year since the great financial crisis. I think that would be a pretty good headline to shake a lot of people out. And then, what do we talk about on the streams quite often? So, that piece of data that usually after midterms have rolled around and the market can sort of digest sort of all the politics and the nonsense that have happened. Stock market returns are actually rather positive after midterms, especially if the Republicans take control of both houses of Congress. Now, again, I'll say that's not what I want. Sort of think about this from a financial analyst perspective and not a political analyst. But if you look at the data, the market tends to perform the best when we have a Democrat as a president and the Republicans control both houses of Congress. And I think it's very, very possible we may be entering that scenario. Hey, ONYX9 says Brooklyn, New York. Good to see you. Welcome everybody from Brooklyn. I see Sally is here. Good to see you, Sally. Colorado Smith says Saludos, walks in Wall Street from Mexico. Good to see you. So I guess I'll ask you guys, what do you guys think about that sort of train of thought or that thesis here of a big crescendo waterfall sell-off across the broad suite of indices here? And then once the markets can sort of digest, let me give you guys another shot of Billionaires Row. Once the markets can sort of digest the election results, then we sort of continue our traditional uptrend. So this building that we're looking at is 157, and this is on the corner of West 57th Street and Broadway. Hey, Connie R is here. Says greetings, Tom from Mexico. Good to see all of our Mexican viewers. Welcome. I trust you're well. Tom G is here. Good to see you, Tom. Dusty Cole. So I'll give you guys an interesting fun fact about myself. This building right here that you're looking at, I think the address is 301. I don't want to say the wrong address. I'm actually going to walk over to it and show you guys. But this building right here used to be like my favorite building in the entire New York City. And the reason for that is the way the windows are designed, especially if you have a Central Park facing view. The apartment just looks insane. Now, pretty much every single unit or every single apartment unit in that specific building has floor to ceiling windows. Now, I want to walk over so I could give you guys the name of the building. So maybe, for fun, if you want to look it up on Zillow, just so you can see what I'm talking about. But this was way back in, 2011, 13. I'm like, wow, that building is like my dream building. I think it's called Central Park Place, 301 West 58th Street. And I don't know, check it out on Zillow for yourself. Let me know what you think. So many luxury apartments. It's almost like the building of the past now. You guys a shot of directly outside. 301 West 58th Street. 57th Street, excuse me. Hey, Brevard County Real Estate is here. Happy Friday to you, my friend. Hopefully you have some good plans for the weekend. Yeah, but you'll notice each individual unit has these almost like pod-looking bay windows. And the units that face Central Park are stunning. So if you Google or you go on Zillow or maybe Street Easy, Central Park Place, 301 West 57th Street, you'll see what I'm talking about. Really, really unique units there. So Brevard County Real Estate, I was hoping you would join tonight because, oh, really quick. So this place, I've been here before. I've actually taken cooking lessons here during my college days. I actually had to come here for a class. This is actually a pretty good time, not gonna lie. Yeah, that was back in 2015. Yeah, Dusty calls like the curved windows very Star Wars-y. Yeah, and it's interesting because if you go on Zillow and you look, for its time, let's say, you know, pre all of these massive billionaire row buildings, that was like my, you know, if you could say, oh, if I would have had a dream apartment in the city, it was that building. Really, really cool. So Brevard County Real Estate, obviously we know that a lot of the big banks kicked off Q3 earnings season on Wall Street. Now, one of the interesting things that I'm seeing in earnings season comes from Wells Fargo. Now, Wells Fargo is the most mortgage dependent of the 6 big US banks, and it saw sales and refinancing activity decline as the 30-year fixed rate mortgage hit 7%. Now, home lending revenue fell 52% in Q3. Now, not surprising to us or anybody who watches the Walks on Wall Street streams, because we've been sort of talking about this for a while, and we have viewers who work in the real estate industry, whether they're brokers or developers, and we've been sort of seeing a lot of the viewers come in the chat and tell us, look, you know, a lot of sales activity is drying up. Now, another thing I'd like to add, and we've reviewed this before, but I think it was when we were doing our Miami streams. I think we took a little bit of an impromptu poll in the chat where I said, for anybody that still owes money on their home, right? So let's say if you have debt, mortgage, how expensive is your debt? And the overwhelming amount of response that we got was that you're paying less than 5%. So if you have a 30-year fixed rate mortgage, 5% or below, and according to bankrate.com, as of today's close, the average 30-year fixed rate mortgage is 7.07%. Well, why would anybody in their right mind think about refinancing their debt if you already have a better deal? And I think that's going to continuously impact corporate earnings as it relates to these banks who have a lot of exposure to the mortgage market, lending market, because I think we may be entering a new paradigm here. And if you think back to previous, I wouldn't say recessions, I would say stock market declines. Let me use that. If we think back to previous stock market declines, it seems like any time the market has sold off, I would say over even 15%, it was met with a very, very strong and forceful response from the Fed to start buying bonds again, start buying US Treasuries, acquire additional mortgage-backed securities on the balance sheet, and the lower interest rates. But I just don't think that's going to happen this time around. I think we are going to have to be forced to live in an environment of higher rates. You know, this place, this Giustino's Pizza, this never used to be here. Now, Giustino's used to be on 10th Avenue, and this used to be a diner. I never went to the diner, but strange to see the difference that this place, man, this place has changed a lot. Hey, Michael Dwyer says, Tom, I agree with you that the market will rebound. It's called a mountain chart, not a valley chart, for a reason. There's no way you can know exactly where the bottom is. Well, yeah, I mean, I think that we could, what I think is, I think people are going to be rather surprised here, because when we think about corrections, you could think about a price correction, but also a time duration correction. And I think pretty much since the great financial crisis, we've only had corrections in the form of price and not in the form of time. So this bear market is going on almost a year now. I think the S&P 500 put in its exact top on January 4th, 2022. This is a good burrito spot. It's called Burrito Box. I would give it a 10 out of 10. One of my favorite burrito spots in the city. So I think in an environment of higher rates, I wouldn't be surprised if this correction is also a time duration correction. And it's very characteristic to that of, like a 1970s style stagflationary environment where we had this sort of chop in the S&P 500. And I think that is necessary to shake out a lot of the passive investors, right? So the market tends to tire people out and then shake people out. And I think it's a very good possibility we also have a correction in duration of time, or maybe the S&P 500 chops around range bound for a little bit. I think it's very possible. Hey, Colleen T says, I'm trying to hold off on getting a new SUV until December, waiting for prices and financing to settle down. I think that's a good plan. I would hold off as long as you can, in my view, Colleen. I would hold off as long as possible. Speaking to Colleen T's comment there, now there was a statistic coming out of Barron's. Really quick, look at this shot of 220 Central Park South and Central Park Tower. Unreal. Amazing, amazing shot there. So I think about 17% of all of the new car purchases or new auto purchases over the last quarter come with payments above $1,000. Isn't that insanity? Now, granted, this is coming from a person who doesn't own a vehicle, but I think a car note of $1,000 is crazy talk. Now, do you guys agree with that or disagree with that? I mean, I don't know. I mean, I would never in a million years spend $1,000 on a car payment. But according to Barron's, I think we may have talked about this before. Sorry if I'm a little bit in a brain fog. I'm not feeling too well, but yeah, $1,000 car payment is insanity. Brevard County Real Estate has agreed. Oh, Colleen T says you saw that article too. Yeah, I mean, I don't know what these people are thinking. Now, I don't want to be one to throw stones, but yeah, I'm seeing a lot of people in the chat says where I live a car. So that's true. So like, for example, sunshine after rain is like, look, where I live, you kind of need a car. And, I was sort of talking about this with one of my buddies the other day. And the conversation went like this. We were talking about, New York City is very expensive, right? And the tax bill is rather high. So here in New York City, we not only pay state tax, we pay New York City taxes as well. So for example, when I was, hold on, before I forget, I want to show you guys Fordham University's campus. Now, many people think Fordham is only in the Bronx, so that is their main campus. However, Fordham University, their law campus is actually right here. So when I went to school here near John Jay College, I would see a lot of the Fordham law students. Now, if you continue walking down this block, they actually just built a brand new sort of high-rise style campus. So if it's not all blocked off with construction, maybe we'll take a walk over there. Dusty Cole, I appreciate that, my friend. I lost my train of thought. I apologize for that. I forgot what I was going to say. Just getting over a little bit of a sickness here. Hey, somebody says, greetings from Istanbul. Good to see you. Welcome. Thanks for being here. So this is the Graduate School of Business Education and Social Services and the School of Law right here at Fordham. Fordham University is a great school. Now, I think they closed this. I think it may only be seasonal, but if you walk up here, this is like a really nice roof deck here as well. Hey, the RT440, this is Tom. I wanted to buy a used Chevy, but couldn't find a decent used car. Went to a Cadillac dealer and fell in love with the Cadillac sedan. So I'm gonna have a high lease. Ooh, copy that. So that was my train of thought. So the RT440, thank you for that. I think that's a very good piece of data. So I was having a conversation with one of my friends, and we're like, look, the taxes in New York are high, okay? You pay state and you pay city, you get hammered. You get fleeced, as I like to say. But, I don't really have to pay car insurance. I don't have to pay for a car. Transportation, you could argue you do have to pay. You know, if you take the subway, it's $275. You know, I don't even know what the monthly pass is for the subway anymore. Does anybody know? I haven't taken it in a long time, but I think a monthly... Well, I'll give you the last price that I remember. The last price that I remember on a monthly Metro card was like $116. So I'm gonna guess, what is it, $130 maybe? Which isn't bad. I mean, you get unlimited rides, but it's sort of like a give or take. So Sunshine After Rain said, you know, where I live, you sort of need a car. Public transportation isn't a thing. So I think it's like a give or take. You know, I don't have to pay car insurance. I don't have to pay for a car. So maybe it's like a give or take. Probably doesn't even it out or average it out, but it's a good point. It's a good point. Hey, Al Baker's here from Hollywood, Florida. Very close to where I got my property. Hollywood, Florida is a beautiful, beautiful place. I like the boardwalk over there at Hollywood. Gary Carpenter says he probably needs sinus pills. So Robert says, how much is an LIRR ride? It's a good question. So I'll tell you what I pay. An off-peak, so there's peak and off-peak, right? So if you go to the city, so if you take the train to the city, anytime before, I think, 10:30 in the morning, it is a peak fare, which is a little bit more expensive. So it's about $14 if you take like the Babylon line or the Long Beach line. But off-peak, I think, is $10.25. Now, I remember buying a monthly pass on the Babylon line back when I was a freshman in college. So I think this was 2014, around there. And I would pay $297 for the monthly pass. So this is the beautiful Lincoln Center. This place looks fantastic. But I think that monthly pass now is like $340, maybe $350. Hey, Susanna H says, hello, Tom. Happy to have you back. Missed the talk and the walk. Hope everything is okay. Hey, thank you so much. Yeah, everything's good. Just these past couple days at work has been really extremely busy, like nonstop conference calls, which is a good thing and a bad thing. You know, working on some pretty large deals here, but having to wake up really early, stay at the office late. So sort of got me a little bit run down. Brevard County Real Estate says, Tom, next time you're in Hollywood, Florida, check out a store called Old Ghosts. Probably not your thing, but it's interesting. I'm gonna check it out. I'll take a screenshot of that. But thank you for the suggestion, Brevard County Real Estate. Hey, Michelle K is joining us. Good to see you, Michelle. We are right here live at one of my favorite places in New York City. This is Lincoln Center. Now, it looks like there's a show going on tonight. But I'll show you guys an all-time Walks in Wall Street favorite. You guys love this Lincoln Center fountain here. And I think you got to enjoy it because in almost a couple weeks, they're going to shut down the fountain for the season. So I guess it's about time we enjoy it. The LT Prod says, what are the chances there is a massive auto loan default going on? So the LT Prod, I think that's a good question. And I think okay, let me think about how I'm going to phrase this. I think we have about 50% of that answer. And the reason for that is because, did you notice? Now, here's what I would ask everybody to do. I would spend maybe 2 to 3 hours to sit down this weekend and just listen and review the earnings call of JP Morgan Chase, as well as Wells Fargo. And one of the things you'll notice, the CEO of JP Morgan Chase as well as Wells Fargo, what they said is that they're actually experiencing lower than normal default rates or default risk across their entire portfolio. So that's across everything, across their credit cards, auto, mortgage. So that's actually, to me, was a very, very surprising sort of statistic, and very encouraging one, especially in these times when rates are skyrocketing, and we're just starting to see our first couple waves of layoffs. Now, I actually think I wrote it down. There was a notable quote coming out of the Wells Fargo earnings call, and it comes from the chief executive officer. And he says, consumer and business customers remains in a strong financial condition. We have historically low delinquencies across our entire portfolio and high payment rates. So as we see these articles about how defaults are ramping across the board, I think it's better to take it from the CEO of a major bank. So I think that's rather encouraging. TM says, good evening, y'all. My first time here. I'm really enjoying walking around New York City and talking finance. Well, thank you so much. We appreciate it. We are now coming up on the New York Public Library here. This is the backside of Lincoln Center. Yeah, the LT Prods is very surprising. Lots of homes were bought during the pandemic. Yeah, and they sort of touched on that, right? Now, I think the major negatives of these banks' earnings reports, especially as it relates to Wells Fargo. So Wells Fargo is the most mortgage dependent, I would say, of the major 6 US banks. So if you think about the fact that rates went from 3% on a 30-year fixed rate mortgage to now 7%, Wells Fargo reported 52% revenue declines in home lending. So I think that's no surprise there. Also, investment banking fees really fell off a cliff. TM is here. Good to see you, TM. Welcome. Jeff says, Tom, what are your thoughts on Bitcoin as a long-term investment? So I do own Bitcoin, but I think if you look at the beta, and we sort of talk about, I think we had an entire stream about beta weighting portfolios. It has a very high correlation to like the NASDAQ, right? And what do we know about the NASDAQ? It is more of a rate sensitive indice because it is very tech heavy. So I think you'll probably see Bitcoin track the price trajectory of the NASDAQ, I would say. The LT Prod says JP Morgan is the least mortgage dependent and they beat earnings. They did, that is true. And I think Jamie Dimon made a couple interesting comments as well. I'll take you guys up onto this grass area. I'm surprised they didn't close it. I think it's already maybe about 9:30 at night. But I think JP Morgan still holds the top spot as it relates to investment banking revenue. I think JP Morgan, ticker symbol JPM, is the #1 ranking for global investment banking fees with about 8.1% wallet share year to date. However, as we've been talking about, gross investment banking revenue is down 43% to about $761 million at JP Morgan Chase. Now, that's to be expected. Obviously, IPO activity is down about 99%. Deal flow is significantly down. But now we are overlooking Juilliard, which is one of the most prestigious music schools in the entire world, right here at Lincoln Center. TM says, hey Tom, what camera are you using? The stream is looking very crisp. So this is an iPhone 13 mini we are using. The usual suspect is here. It says, happy Friday, everybody. Good to see the usual suspect. Well, check this out. I'll give you guys sort of a view over the balcony. William Kaiser says, do you think the term transitory inflation was scripted for Powell and the Federal Reserve, or do you think they actually believed that inflation was transitory? No, I don't think that the Federal Reserve ever believed that inflation was transitory. I mean, these are very smart people, right? I think Janet Yellen too was one of those key people that was saying, you know, inflation is going to be transitory, and they need to do that for optics, right? Because if you sort of come out and say inflation is not going to be transitory and it's only going to get worse from here, well, that's going to create a massive, massive panic spiral. So they sort of have to, I mean, for a lack of a better term, lie. Because everybody knows it wasn't going to be transitory, right? And, you know, yeah, that's just, I guess, my opinion. So I don't believe for a second that Jerome Powell, chairman of the Fed, ever thought that inflation was actually going to be transitory. I mean, I think there was some crazy statistic that we printed about 90% of all US dollars ever in existence during COVID. So, I mean, that massive amount of stimulus, you know, those too many dollars at some point are going to start to circulate through the economy and create massive amounts of inflation. Now, it's not only on the monetary policy side, it's, you know, extreme, I would even say egregious fiscal spending as well. And so this week was a very important week in New York City. The Robinhood Investor Conference, so the JP Morgan Chase / Robinhood Investor Conference took place. But before the conference, there was a very good interview with Paul Tudor Jones, which is really regarded as one of the most successful traders of all time. And he was doing an interview with Andrew Ross Sorkin. And one of the things that he said in that interview, if you guys want to watch it for yourself, if you type !PTJ in the chat, you know, one of the things Paul Tudor Jones was talking about is that you need to define the decades. And he said the 70s can be defined as the inflationary environment. The 80s can be defined as extreme dollar volatility. The 90s could be defined as, you know, innovation or just starting innovation with technology. The 2000s, you know, leading up to the great financial crisis. And the teens, he describes the teens as something we talk about all the time on the live stream, which is super lackadaisical monetary policy and egregious fiscal spending. And he thinks that the 20s or 2020s is going to be defined as the exact polar opposite, which would be a decade defined as higher interest rates for a sustained period of time and responsible fiscal spending. And usually these market cycles sort of end in all those like big crescendos. You know, if anybody is, I guess for our Elliott wave theorists out there, you could call it a wave 5 of a grand super cycle. And I think that's what we saw. I mean, we saw massive amounts of fiscal stimulus during COVID. We saw all of these demand for risk, the meme stuff, the meme stocks, right? All that nonsense. A lot of this cryptocurrency junk. And it was sort of like a speculative frenzy and mania on top of extremely accommodative monetary policy, in addition to fiscal spending that was just out of control with this Inflation Reduction Act. And it's not just the Democrats too. Donald Trump and the Republicans spent like crazy, but I think the 2020s is going to be the exact opposite. And I don't think many people are ready for that. Not sure. Hey, Nakos is here. Says, hey Tom, happy Friday. Thank you, my friend. Appreciate it. Wayne McKay. Toby Sanchez is here. Says, hello Tom. Happy Friday. Hope you're getting better. Thank you so much. I appreciate that. Smee Media says, hey Tom, are you following the financial issues in England? Can you explain? So we've been talking about the Bank of England quite a lot on the channel. Now, I think one of the main things that you're seeing, and we talk about, I guess you could say, bond market stability. Now, I think this also extends to the pension crisis that we're seeing. And sort of the build-up to this is, I think all comes from not wanting to have the necessary conversations. And I'll sort of quickly explain what I mean by that, but I don't want to get into a big argument about pensions. The reality is, pension systems in and of themselves are not sustainable. And nobody wants to have the obvious conversation of telling employees that they need to take on more responsibility to start to add money to their own pension, right? A lot of employees just want to work and then have their, government or have the company that they work for take care of them in retirement. But this isn't, the 50s where that stuff sort of worked out, right? These pension obligations grow so large that it's just not sustainable. So what this has caused is pension funds to become extremely levered, especially levered in taking on derivatives and speculating in the derivatives market on bonds. Now, that works to juice returns when interest rates are really low. So over there in the UK, they're called gilts. And when interest rates go up, this has caused a massive sort of cascading effect. Because if we think about the relationship, obviously, between bonds, or in this case, gilts and yields, as gilts, the yields go up on these gilts, that means people are dumping these bonds, right? So as bond prices go down, yields go up. And as yields go down or stay suppressed, the prices go up. So we've been seeing this massive sell-off in the gilt market, which was really triggered and caused by the new PM, Liz Truss. I thought it would be a good idea to make this massive inflationary, in my opinion, bill to stimulate the economy. And the market believed that it would work, right? When you stimulate the economy and spend money, that's going to add to additional inflation. I think in the UK, they're already facing about 9% inflation. Many economists believe that it could potentially double by next year. So that essentially gave the signal to market participants that I don't want anything to do with the pound sterling, so I'm going to dump the currency and I'm going to dump the bonds. And that has set off a cascade effect of margin calls. And in order to meet those, your margin call, excuse me, I'm a little bit sick, so excuse my voice. But in order to meet your margin call, you need to sell other assets, right? So pension funds need to sell more assets to meet their margin call, and it's just a cascade effect that goes on and on and on. So it's been blowing up. So as it relates to the Bank of England was forced to pivot. So the Bank of England was really taking the side of the Federal Reserve here in the United States to say, look, we're going to continue on the path of quantitative tightening, and we're not going to buy any more bonds or gilts. But since the financial system essentially blew up over there, they were forced to go back into the marketplace and start buying gilts to save the market and suppress yields. So now it sort of comes down to this. Are we going to be in a situation where we need to have perpetual central bank intervention to have a functioning monetary system? Or do we let the entire thing course correct and crash and have a reset to a new system. Hey, Clarence J says, I think the broader markets will be flat for a few years, but there are individual bulls everywhere. I think you may be right, Clarence. So you're saying more along the lines of like a stock picker's market? I agree. Hey, Billy is here. Says, happy Friday, Tom. The stream is always consistent highlight at the end of my day. Thank you, Billy. I appreciate it. So yeah, the Bank of England essentially was forced to pivot, right? So there's all of this pivot talk on Wall Street. Is the Federal Reserve, which is pretty much the only central bank that we talk about here in the United States, but this is central banking all over the world, right? You have the Bank of Japan, which is continuing down their road of quantitative easing and negative interest rates. It's pretty much the entire world's central banks pivot towards quantitative tightening. So the financial system essentially stopped working over there for a period of time. And if the Bank of England didn't step in to intervene and start buying gilts and suppressing yields, well, then you would have probably had the pensions, some pension systems blow up over there. Hey, CM is here. Says central banks are poison. Good to see you, CM. So CM, I take it that you are maybe a part of the End the Fed. I think that was a big prominent movement during the Occupy Wall Street protests. Man, look at this view here. This is beautiful. You can see every single building on Billionaires Row. Hey, Lise is Tom. Even though the UK, we allegedly only have 9% inflation, some items in shops are between 25 and 50% more expensive than 6 months ago. Yeah, Lee, I think you're right. And it's the same thing here in the United States. You know, our inflation is supposedly around 8.5%. But I can guarantee you, just in my personal life, I mean, inflation is a lot more than 8.5% for sure. Nakos is here, good to see you. CM says, I sure am. Yeah, I would probably consider myself there too, honestly. Smee Media says, thank you for explaining. No problem. All right, so we are now walking directly past the Trump International Hotel and Tower. Yeah, I saw that too. Clarence Jackson says the lights are on in the condo at the top of Central Park Tower. I just noticed that as well. I didn't know you were home tonight, Clarence. You should have invited us over to start the live stream at the top of the Central Park Tower. Now, I would like to say I think the central bank, as in the Federal Reserve here in the United States, is sort of, I don't think we could sort of just turn a blind eye to the fact that this Federal Reserve doesn't impact global markets. And as the Fed continues to raise rates, that puts a lot of upward pressure on the dollar, right, or the Dixie. And that has been really, really hammering emerging market currencies and emerging market countries that have a lot of dollar-denominated debt in and of itself. Hey, where's my Z? It says, hey, Tom, I work for a company that went bankrupt and the pension reverted to PBGC. The best I could tell is a pseudo-government entity where my tax dollars are now funding my pension. Any insight on that org? Yeah, I mean, I don't really have any insight on that organization, to be honest, but, you know, I think you make a very good comment there, and I think it's well appreciated because at the end of the day, I mean, I think a lot of these problems stem from not having honest conversations, and I think it has to do with bad politics. right? Because would you vote for somebody who says, I think you should be required to fund more of your personal dollars into your own retirement, into your own pension? Well, no, of course not. You're going to vote for the person who says, no, we're going to keep your pension intact, and you don't have to contribute a single dime more, right? I mean, that's the easy answer. But at the end of the day, that causes way more long-term negative effects, because in order for these pensions to meet their obligations, every single year they're forced to generate more returns. So this forces them to go into the market and search for yield and search for risk, right? So this doesn't only relate to pensions, speculating in the stock market. Pension funds has a historically high proportion of their total AUM, or assets under management, towards very speculative private equity and venture capital deals too. Hold on one second. Anyway, so I think, as pensions become more and more underfunded, the more it inadvertently forces them to take on more risk. And that's where you get into, derivative exposure to leverage yield and leverage returns. But, a lot of that stuff may be all well and good when interest rates are low. But what happens when we're in an environment where rates are high? Well, you have exactly what you had where you had to have the Bank of England come in here and start buying gilts. Hey, The Wire is here. Good to see you, The Wire. Dr. Longus, good to see you. Thomas Conroy, it's his first time in the stream and definitely glad I found it. Well, thank you, Thomas. We appreciate you being here. And hopefully you had a good week and a good start to your weekend. So this is 59th Street, Columbus Circle. I think we're going to walk down Broadway tonight. But we'll quickly just go over the base case numbers. So Morgan Stanley reported earnings, and they reported earnings per share of about $1.47 versus analyst expectations of about $1.49. That comes off the basis of top line revenue of about $12.99 billion versus about $13.3 billion expected. So a little bit of a miss there, but I mean, many people were surprised, but not me, and probably not you guys if you've been tuning into these streams. I mean, investment banking revenue and investment banking fee income is obviously going to be way down. I mean, IPO activity year over year is down 90%, right? As interest rates go up, liquidity drains from the system, there's going to be a lot less companies going public, a lot less deals to be had. On a profitability standpoint, Morgan Stanley raked in about $2.63 billion. That was about a 29% decline from a year ago. If we get a little bit more granular to the investment banking or IB revenue, that fell 55%. So exactly right on target as we thought, to about $1.28 billion. And investment management revenue declined 20% as well to about $1.17 billion. Now, I think the reason why, we saw JP Morgan Chase actually beat earnings expectations. I think the reason why Morgan Stanley missed their expectations is they don't have any help from the consumer or retail banking standpoint, right? I mean, you don't really walk into, a retail storefront and go into Morgan Stanley. Now, I think Morgan Stanley does have some retail storefronts, quote unquote, but those are the private bank, private client, more high net worth individuals or ultra high net worth individuals. And if you look at the earnings report of JP Morgan Chase, one of the things that really helped them out was higher interest rates on deposits. As the Fed is raising rates, banks tend to make more money, and JP Morgan Chase obviously has a lot more consumer and retail exposure than Morgan Stanley, which has none. So now we're on the corner of 57th Street. You can see the beautiful 432 Park Avenue building, one of my personal favorites on Billionaires Row. Nader CH says, hey, what's the light on top of 157? On top of 157, I think it's just like basic lights. You know, I said I'd walk down Broadway and I made the turn. I think I'm just too used to making the turn here. But I'll show you guys, take a little bit of a walk down Broadway. I'll show you where Stephen Colbert has his studio. Just Barry is here. Says good Friday evening, Tom. Hey, Barry. Always a pleasure to see you. Dr. Longus says, Tom, what do you think the inflation rate would be if it included energy and food? Well, I think they reported that. So the CPI was, what, 8.5% for the headline CPI. Kelly says, Tom, I need your advice. Would you pay off credit card debt by highest interest rate first, or the one with the highest dollar amount? The highest interest rate. Well, actually, I think you just have to run the math on that. Because, you know, if you have, you know, $2 of credit card debt with 100% interest rate, but you have, you know, $60,000 in credit card debt with, you know, a 2% rate, you know, the $60,000 worth of debt is going to accrue more interest. So I think you just need to do the calculation. Now, since I don't know what those exact numbers are, I don't know if I could tell you, but I would just run the calculation, and I think they actually do the calculation for you. When you get your credit card statement, they should give you like the amortization. I guess you shouldn't call it that, but they give you what it would take to pay it off if you just paid the minimums, right? Marcus is here. Rick, good to see you. Thanks for joining, Rick. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days a week between New York City and Miami. We'd love for you guys to join us for these particular chats. Taxi Cab says, hey there, Tom. SEC's Gary Gensler says the CFTC authority over stablecoins should be bolstered. Well, I mean, I think my opinion on that, Taxi Cabs, sort of stays the same. And I think we're sort of starting to see a lot of the stuff that I've talked about come to fruition, right? With the SEC fining a lot of these celebrities for promoting these cryptocurrency scams. And I think a lot of that stuff is going to go away. Now, the good news is I think we're going to see a year of increased regulatory clarity. I still stay away from all of these alternative coins because I still think that they are classified as securities. So until we get, you know, more clarity on that, I just don't see it worth the risk. But I think the best rule of thumb is, you know, if you see it's almost like 100% given. Anytime you see a celebrity endorsing any type of investment, you could pretty much guarantee with 100% certainty that they're just using the celebrity as, you know, some form of like useful idiot to sell product or force an investment on people, especially as it relates to cryptocurrencies. I would stay away from that very aggressively, let's just say. So it looks like they opened up a new supermarket here. This never used to be here. Hey, Sam Oliver says, should the Dow get a bounce from here? I'm not sure. I mean, in my opinion, I think, you know, if you look back throughout the history of major market bottoms, especially as it relates to the S&P tends to have these very sharp V-shaped bottoms. And I think that is due to a couple of factors. You know, usually at the point where markets bottom, you tend to have some sort of, Fed pivot. I think we're very, very far along away from that. Now, my biggest concern, and we sort of talked about this at the beginning of the live stream, is that the Dow Jones Industrial Average and the NASDAQ Composite have both now closed well below its 200-week moving average. So I think you could see a pretty big crescendo type sell-off. This building right here used to be a building called Bad Boy Entertainment. So this used to be P. Diddy's, I think, office. Now, I think we've covered this on a stream before. As you can see, it says Bad Boy Worldwide. So when I was a little kid, used to come to the city, I used to walk past here, and sometimes you would actually see P. Diddy eating at this restaurant right here. Not this one, the one further down the block. But now it's just a vacant, this has been vacant for probably over 15 years. I mean, look at how horrible it looks. Now, I think we talked about this before on a previous live stream, and one of the viewers said that this particular building is slated to demo. So this entire thing is going to be demolished, and maybe they're going to build something else, but this has been vacant for years and years and years. But this used to be the headquarters of Bad Boy Entertainment, Bad Boy Worldwide, whatever you want to call it. Yeah, Dan Zhang says, yeah, what a waste of real estate. Agreed. I think it's going to get demolished, though. I think it may get demolished because, I mean, this is prime real estate, to Dan's point. This is West 54th Street and Broadway. Across the street, you have The Late Show with Stephen Colbert. So Dusty Cole says, is he just sitting on it? Does he own it? I think he just leased it. I don't think he owned the building. I'm not too sure. That's a good question. I don't think he owned it. I think he just leased some of the space. I think they moved to Times Square, but I mean, definitely a lot of history in that building, if you think about it. Blues writer, funny. But yeah, just look at what an eyesore this building is. So everything is blown out. Everything is vacant. And this is just mere blocks away from Billionaires Row, where we just were. I think it's going to be interesting to see what they make of it. Yeah, Joey Bells is back when he was known as Puff Daddy. So this is the very iconic Ed Sullivan Theater. Dan says, Tom, you sound like you're losing your voice a bit. Yeah, so I haven't really been sick the last couple of days, just a little bit run down. That's why I haven't been streaming. It's been extremely busy at work. I've been pretty much on conference calls, giving presentations nonstop. So I had to take about 3 days off. I think it was 3 days off, maybe 2 or 3 days off from streaming. But now we should be back. But yeah, my voice is definitely a little bit taxed. I'll give you one more shot of the Ed Sullivan Theater. Hey, Blues Writers, Tom, don't you think the Fed will have to pivot soon to save the rest of the world from economic collapse? Yeah, I mean, I honestly don't think they will. I think they're, because every week we hear from additional Fed presidents, right? Not just from Fed Chairman Jerome Powell. We hear from multiple Fed presidents like Bullard and the like, and they seem pretty steadfast on keeping interest rates either sustained or increasing them. Now, if you look at the futures market, after we had that hotter than expected inflation reading on Wednesday, we were at about an 80% probability for an additional 75 basis point rate hike at the November Fed meeting. Well, that just went to about 95%. So if we get an additional 75 basis point rate hike at the next Fed meeting, that should take the Fed funds target rate to about 4.25, I think. Which would line right up with projections for year end of about 4.75% for the Fed funds rate. This is the Barclays investment bank, which actually used to be Lehman Brothers before they collapsed. Now, many people are speculating that Credit Suisse is on the ropes to potentially go under and collapse. We'll talk about that tomorrow because I do have some data for you guys, but it's going to take a lot of talking to get that out, and I think I'd lose my voice if we went down that path. But we will be talking about Credit Suisse tomorrow. Hey, pups, is this my birthday today? I'm so old, I'm 23. Oh my God. Pup, happy birthday, my friend. 23 was a great year for me. I think it's going to be an even better year for you. So happy birthday to you. Dan Zhang says, Tom, the S&P 500 futures ES dropped 120 points right after the CPI report. NQ pretty normal. Rare sight to see. Yeah, I mean, we had after the inflation numbers were out, we had that big rally day on Wall Street. But I think that was mainly a lot of short covering. We've given all those gains back. I mean, look, I was going through some charts tonight, Dan, and here's the good news. I'll give you guys the good news. Usually when I get very bearish and start posting very bearish charts, now if you guys want to follow me on Twitter, that's usually where I post a lot of my thoughts on the market and different charts I'm looking at. Sometimes I'll give you guys the link to different financial models that I'm building, so you can follow at Walks Wall Street on Twitter. But usually when I start to post very bearish charts, that's usually right around the time when the market's going to reverse. So that's some good news for you for you guys. But some of these charts, especially on monthly and weekly time frames, just look so egregious. These could be multi-generational tops, specifically on Tesla. Hold on, let me cross the street here. Sometimes people don't know this is a stop sign, so I just want to make sure that I can get across without being pounded into the pavement like Peloton stock. So Tesla, if you guys saw what I posted, Tesla looks like a multi-decade top. Very just brutal head and shoulders pattern there on Tesla. Now, let's talk valuation. Very seldom do I just like to look at charts. I'm more of a fundamentalist, but you'll tend to see the fundamentals will corroborate with the chart, right? Because if a company has good earnings, good sales, high pre-tax and after-tax margins, great return on equity, well, it's going to attract a lot of fund flows from institutions, and the stocks usually go up over time. You can just look at like Alphabet, Microsoft, Apple. So usually the fundamentals will corroborate with the price. But I think and I was talking to my friend about this the other day, I think the market is going to have to rethink what a fair valuation is in terms of what you're paying. So I think the last time I looked, Tesla's trading at about maybe 38 times next 12 months earnings, I think, if you guys want to just pull that up. Which, to be fair, is sort of what the type of valuation it was trading at during COVID, right? The COVID crisis. But during the COVID crisis, interest rates were zero. interest rates are no longer zero. So I think investors are going to demand a very different valuation just because we're in a different environment. We're no longer in quantitative easing at all costs, artificially suppressed rates. We are in an environment of QT and potentially sustained higher rates. And if you look during previous recessions like the 2008 financial crisis, I think the S&P 500 at one point was below a 10 on a PE ratio. I think right now, what are we at, 19? 18, 19? So I wouldn't be surprised if, just because it hasn't happened in a while doesn't mean it can't happen again. We could revert, there could be a time where the S&P could be trading at, 15 PE, 10. I mean, there's nothing that says that it can't. So if you look at a chart of Tesla, right? Look at where it was trading at the lows of the COVID crash. There is no rule that says it can't trade at that level again. And that would actually sort of make sense because, I'm having a little bit of brain fog tonight, and I want to give this particular analyst credit, but his name is slipping my mind. I apologize. My brain is fried. If you want to see the analyst's name, you could just go on my Twitter. But he posted an interesting tweet, a screenshot from Bloomberg, where essentially it shows Fed liquidity and market returns. And over the past decade, market returns have had an extreme high correlation to Fed liquidity. So central bank liquidity was paramount to these crazy stock market run-ups. So if you suck that liquidity back out, what's to say, Tesla doesn't just go back to those levels where it was trading at before this injection of liquidity? Who knows? So we are standing outside of the UBS building here. Yeah, Dan Zhang says, wow, Tom, Kathy Wood's ARK fund is 99 cents away from the COVID all-time low. Yeah, you're right. Grant Street, good to see you. Metal Mike, good to see you. Clarence Jackson says, I am looking into undervalued companies with lots of cash. Definitely a good plan. So Clarence, anything in particular that's on your radar that you're looking at? This is Nürburger Berman. Pretty notable, prominent name on Wall Street. Hey, Sonia C is here. Good to see you, Sonia. Welcome. So I guess that's all I'm saying. It's that, I think investors become very adaptive to their environment. And I think a lot of investors are still potentially stuck in the mind frame of, valuating businesses on price to sales, right? So growing top line revenue at all costs. But I think that model is going to change because we're just in a completely different interest rate environment. Hey, Andre Almar, good to see you. Somebody says, where do you think oil is going? So where are we trading at now with crude oil? Ticker symbol CL. I think Brent crude, I don't know what this guy's doing. I think Brent crude closed above $90 a barrel. What is he doing? Oh, maybe he dropped something? Hey, Zozo Bob, what's up? Good to see you. Wow, this is a really nice shot of Radio City Music Hall. Love the American flags in the background. Dan Zhang's CL is currently $85.61. So that means Brent crude must be like what, 92, 95 bucks? Yeah, Clarence is like that guy's in another world. He's probably staring at his 401k balance. You know, let's check out what's it called over here? The beautiful, the one, the only Rockefeller Center. Sonia says, Tom, what kind of music do you enjoy? I like all the classics. So you think about like the Rat Pack. Big fan of Sammy Davis Jr. I think he's a genius. Dean Martin as well. Big fan of Dean Martin. Yeah, I mean, anybody who was in the Rat Pack. Sinatra, fantastic. Billy Joel as well. Yep, that's a good one. Roy S., love that. Ninja's joining us, good to see you. The usual suspect. Yeah, I mean, look, when the markets are getting pounded this much, it's good to crack a few jokes. Destructionist says, Tom, you should check out Megadeth. You know, I think there's a... If we're talking about... Now, I'm going to just assume that they're a very heavy metal band, maybe. But there is a particular band, I think it's called 1,000 Demons. I do actually listen to them from time to time. Hold on, I'm trying to think of the song. I think it's called, I forget. It's on the tip of my tongue. Yeah, if I remember, I'll tell you guys, I promise. Yeah, Vincent NYC. Well, I think it's probably just a short covering rally we had. And I think we're going to see a sustained sell-off into the midterm elections. Cindy Foley's like, just hum a few bars. This isn't the type of song that's very hummable, I would say. It's I think the song may be called 99 Demons. I think. Let's quickly run through the numbers. Everybody at JP Morgan's earnings. Wow, they still have the roller skating rink up. I thought they would have taken this down by now. Ah, Billy, repeat process by 1,000 Demons. Yes, that's it. Now, I'll warn you guys. If you start to listen to the song Repeat Process by 1,000 Demons, you gotta make sure your headphones are turned all the way down at the start of the song. That's just my warning. You gotta make sure they're turned down. Yeah, Clarence is like, October is historically a bad month. So this is the roller rink at Rockefeller Center. Hey, Mohammed Youssef, good to see you, my friend, from Egypt. So Clarence, I was on a conference call, and October is usually the month where you see the vast majority of market bottom. So the stock market tends to like to bottom in October. But by the looks of the way October's going now, I don't think we're going to see that. You know, I really think we're going to have this cascade effect. I always talk about like a waterfall sell-off, and the S&P loves to do this, right? Now, the sell-off that we've had so far since January 4th has been very, very orderly. You know, not a lot of panic. And I think that's the reason why we haven't seen like the VIX really blow off here. Because, you know, we have, you know, a couple down days of maybe a couple percent, 5-6%. Then we have a nice rip-roaring, face-ripping rally, and then we head lower. Usually when the markets bottom, I mean, you'll have like circuit breaker days where it's just total carnage, sort of like what we had in 2020 and 2018. Now, in 2018, the market bottomed on Christmas Eve. I remember it very well. And that was like total pandemonium. So I think we're gonna get that moment. Hopefully sooner rather than later. But I also think the market is very, very overdue for a correction in the form of time. And we sort of talked about that at the beginning of the stream, where you can have a correction in terms of price and time, or just a time correction. And we haven't really seen that so far. So this is St. Patrick's Cathedral. Hey, Double Down says, hey Tom, any thoughts on the Gold Standard Restoration Act that was introduced in the House last week? I didn't even know that was a thing. Is that true? Was that actually introduced to the House last week? The Gold Standard Restoration Act? Well, if it's anything like it sounds, I think I would be in favor of it. But I'm just not familiar, to be honest. I mean, thank you for telling me. I'll have to do some research, but I don't think that will materialize, unfortunately. So let's quickly, we just got to run through the JP Morgan Chase numbers real quick. So JP Morgan had a beat on both the top and the bottom line. I guess while we're doing this, I'll show you guys the front of the St. Patrick's Cathedral. So earnings per share came in at about $3.12. Many analysts on Wall Street were expecting about $2.88 on the bottom line. As we talk about revenue, the bank pulled in about $33.49 billion. That is slightly higher than the $32.1 billion that was expected by analysts. Obviously, as we reviewed before, JP Morgan Chase is still the #1 ranking for global investment banking fees, with about 8.1% wallet share year to date. Now, investment banking revenue was down about 43% on the year, or I would say year over year, but that's to be expected with IPO activity being down 90%. That revenue came in at about $761 million. And third quarter profit overall declined about 17% to $9.74 billion. So nothing out of the ordinary. I mean, no surprises. I mean, we knew that the banks like Wells Fargo that were exposed to mortgages and refinancing market would have significant revenue declines. And we knew that major investment banks would have I would say a huge loss in fee income, being that IPO activity is falling off a cliff. Hey, Teresa Diaz, thank you so much for the $2 donation. Says, Tom, congratulations on 22,000, holy crap, 200 subs to the channel. Wow. Well, thank you everybody who's been joining us here on Walks in Wall Street. It's insane how fast we have grown. You know, I was looking at the YouTube analytics, and it seems as if we're growing at about 50 people a day. That's insane. So thank you guys for that. Hey, William Creech. Good to see you, William. Thank you so much for joining as well. Charles D says Tesla is near 52-week low, will likely go below next week. I think so too. You know, I posted a chart on Twitter. I think it may go all the way back to like 60 bucks. I do not think that is out of the cards, let's just say. Hey, Colleen T says, gotta leave. Everybody have a great evening. Colleen, have a great weekend. And hopefully we'll see you tomorrow. We'll probably be live tomorrow as well. Hey, Kaylee is here. There's not too many people out tonight. Good to see you, Kaylee. Thank you for joining. So we've already been streaming for an hour and a half, which is crazy. So I want to make my way down to 34th Street. Clarence Jackson says, we haven't seen the capitulation that is needed for a bottom. I agree. Now, the VIX, I think, is at 32, right? Which sort of implies about a 1.5% to 2% intraday swing, which is crazy volatility, by the way. So, Clarence, that actually brings me to my next point. I think Goldman Sachs reports earnings early next week. I think a bright spot in Goldman Sachs earnings is probably going to be trading activity. Increased volatility. Proprietary traders tend to do quite well. So I think that's going to be a bright spot in Goldman's earnings. Our friends at Citadel are probably raking in the big bucks too. Hey, Gail Arnold says, Tom, I just retired from BNY Mellon and enjoying the site. Hey, well, congratulations on your retirement. I mean, that's a huge accomplishment. It's fantastic. So congratulations to you, and please enjoy your retirement. That's awesome. And thank you for being here, by the way. Which part of the bank did you work in, if you don't mind us asking? Hey, Donna L. Good to see you, Donna. Thank you for joining. Sunshine NYC, good to see you. Joss Evelyn is here. Old Tape Archive says, Tom, do you do options trading? I don't. Excuse me. So the only time I'll really utilize options is if I have a pretty large position. So let's say if I have a very, very big position in something and we're in a bull market, and let's say if that particular position is rather extended above, you know, it's 50-day or 200-day, and I'm holding through earnings and I don't want to dislodge any of my core position, but I think, you know, we may have a little bit of a pullback on earnings. What I'll do is I'll just buy some insurance on the stock, just so, you know, to dampen the volatility, I guess. So maybe I'll buy, you know, a couple lots of puts on the position just to, you know, if, let's say if it gaps down on earnings or something like that, or misses. That's really the only time I utilize it. But outright speculation and options, I really don't. More scaffolding going up. I wonder how long this scaffolding will be up. We'll probably be walking under this for the next 2-3 years. Yeah, Clarence Jackson says wealth management heavy firms will see drops due to lower revenue from fee-based accounts. I think Morgan Stanley saw that. So I think you're right. So Clarence, how was the conference? any updates from that? Now, I know that the Robinhood, JP Morgan Chase Robinhood conference was going on in the city. Unfortunately, I could not go to that. I would have loved to go to that. And I think our good friend Ben Bernanke, which I think was the 14th Fed chair, was going to be speaking at the conference. And I was rather intrigued to see from his perspective what he thinks of Fed Chair Jerome Powell's current monetary policy. Hopefully they'll be posting those interviews on YouTube. Hey, Patrick, New York, good to see you. Mark Francis is 078. Says, hey, Tom, happy Friday, good to see you. You know, something interesting, speaking of Morgan Stanley. Actually, I'll save that for later. All right, so we are now in the Diamond District, West 47th Street. Monique Pearson is here. Good to see you, Monique. Welcome, welcome. Antonio. So right here, East 46th Street, I used to turn down this block almost every day. Well, this block or the next block, either or, we go to work. Our office was right here. So if you see that big building, we usually walk past it on the other side, but this is the Marsh McLennan building. So we would work right there in a big quantitative hedge fund, or quant shop on Wall Street is located right in that building, D.E. Shaw. Mr. Truth Be Told 51 says, have you ever invested in tax-free municipal bonds or muni bonds? No, I haven't. I have not. Now, we've been getting a lot of comments about buying bonds, obviously because rates have now gone up. More specifically, I-bonds. Check out the top of the One Vanderbilt. But I think I-bonds, you're limited to about $10,000 a year. Hey, Old Tape Archive, thank you so much for the $10 donation. I appreciate you very much. And thank you for the support. Once again, Old Tape Archive, thank you for the donation. Much appreciated. Hey, Johnson's question I have here is, I am trying to get more views on my channel. Please, yeah, I've never really sort of done any like the search engine optimization stuff. I just sort of pick up the camera and go. So I'm probably like the worst person to ask in relation to try to like do special things to grow the channel, to be honest. Dr. Longus says, yeah, bonds are a way to go in such a terrible economy. So has anybody heard of the old terminology on Wall Street? Buy bonds, wear diamonds. Anybody familiar with that? Now, definitely hasn't worked out too good, has it? Now, I think let's say if you buy an I-bond or something, right? I think the yield is locked in. Whoa, Empire State Building is all blue tonight. That's gonna look crazy. Oh, now it's red. Huh. Wonder why. Anybody know why the Empire is lit up in blue and red tonight? That's strange. Dusty calls like that's how we like it. Forget SEO. I mean, I probably should do that stuff, but I just, after work, I'm just so shot that I'm like, all right, I just want to turn on the stream and get after it. Maybe I'll try it. We'll see. Oh, is that right? So Al says the Empire State Building is lit up for Hispanic Heritage Month. That's cool. I didn't know that. CM says not a good time to buy bonds in an inflationary environment. Yeah, I can't give any type of specific advice, but I can say I do not have any bond exposure. Well, actually, if I had to get on a technical sense, I would actually be lying to you guys, because I still have some savings bonds from when, from like when I was a little kid. Does anybody else, as a tradition, your grandparents gave you savings bonds and things like that when you were little kids? Or is that just me? I think I have these like $100 savings bonds. I know, maybe that's just me. Yeah, Jeep guys has savings bonds. Yeah, when I was a little kid, my grandparents used to give me those savings bonds. Maybe it's just, I'm not sure if anybody else. Mark Francis says, yes, it's a tradition. So I guess besides those, I guess, that's about it. All right, so we are right outside of Steven Schwartzman Building. I think Blackstone also reported earnings this week. I've been so bogged down, I didn't even have time to see what they reported. Oh, Diane says used to get them through a payroll deduction. Really? Wow. So you could just see the Empire State Building through the fog here. Life, Liberty, and Guns says those bonds could be very valuable. Yeah, well, I think what happened is you buy them at half the face value, right? And then over their maturity period, you know, you technically get, what, 100% return on your investment, but after inflation, that's probably degraded away to nothing. I think it's more tradition more than anything. Yeah, so Diane says, Tom, you need to drink hot tea with lemon. So I've been hammering the tea today. I am so sick of hot tea. I've been hammering it all day. Because I know, for those of you joining, I apologize. I know the stream is a little bit shaky. It's probably not a good stream tonight, but I'm having a little bit of issues with my voice. Feeling a little bit out of it, so I apologize for that. But yeah, I mean, these past 3 days have just been nonstop conference calls, so feeling a little bit run down, but I'm pretty much back to normal now, all better. But my voice is not, it probably sounds a little bit hoarse, I guess. All right, I'm gonna give everybody one of my favorite tips in New York City. You ready? I'm gonna give it to you. So right here, on the corner of West 40th Street, adjacent the Steven Schwartzman Building, the brand new New York Public Library, if you go all the way to the 5th floor, so right here, 5th floor, you can use the Bloomberg terminals for free. So there's about 7 terminals that you could use absolutely free. So for those of you who work on Wall Street, or maybe you work at, you know, a big analytics company or an insurance company, you probably are familiar with using a Bloomberg terminal. And those are rather expensive. I think they're like $2,500 a month. So if you don't have the budget to buy a terminal yourself, or you don't work at a bank or a hedge fund or something like that, just come here, it's free. And you can use it as long as you want. Yeah, TV Room says you only need ginger. I should probably try that. So this is the old Lord and Taylor building. And I think Meta It's either Meta or Amazon is going to be right in here. I forget which one. Hey, Savi's here. Good to see you, man. Savi's like Bloomberg terminals for free. Yeah, I mean, especially if you're a student, right? Say if you're a college student or something like that, you want to use the terminal, I'd be on that all day. If I was a college student and I could have access to free terminals, I'd be on it all day. Wow, we have a viewer from Iraq. That's awesome. Well, good to see you. Thanks for joining. Welcome to New York. I think you may be our first or second viewer from Iraq. Wow, think about that for a minute, everybody. What a crazy, crazy reach YouTube has. That's awesome. That's so cool. That's just mind-blowing. Well, thank you for being here. Appreciate it. All right, West 37th Street. Now we're gonna cross the street. So I wanna show you guys this is gonna be what I like to call a face-ripping view of the Empire State Building. Now check this out. I mean, talk about fantastic. Is that not like a 10 out of 10? Okay, I don't think it's quite a 10 out of 10. I'm gonna go 9.7. It's a pretty high score. But man, beautiful view of the Empire tonight. Hey, JC says hello, New Yorker from Virginia. Good to see you. Oh, CM says used to use the NYU Stern ones for free. That's awesome. Yeah, I mean, unfortunately, the school I went to didn't have any of that. But yeah, definitely very good resource. So personally, I don't pay for Bloomberg. I don't think for me it's necessary. I don't work in banking or anything like that. I use a sort of a form of Bloomberg that's more geared towards like an IBD type of canned slim trader. I pay for MarketSmith, and I definitely need that. I think I pay like $200 a month or something. You know, honestly, if you really want to grind, everything that's on Bloomberg, with obviously a few exceptions, it's pretty much for free on the internet, right? If you want to really bootstrap it and go old school, you know, what I used to do is make the scc.gov as my default homepage. You know, obviously just to get the 10Ks, 10Qs, things like that. Kaylee says you're sick too? Well, maybe it's something that's going around. I mean, a lot of people, especially in New York, either have a cold or something. Maybe it's something going around. Who knows? You know what I've noticed is actually getting a lot better? So, the only time I ever use Yahoo is to obviously scrape data from Yahoo Finance, right? Yahoo Finance actually has a lot of very good data, especially historical data on like price action. But Google Finance is now totally revamped. Has anybody been on Google Finance? It's actually pretty good, not gonna lie. Oh, Dan Zhang, is that right? Dan Zhang says, Tom, one of the best financial news sources is actually investing.com. They take headline news from a variety of sources like Bloomberg and Reuters. There's also some pretty good Twitter accounts too. Wow, look at that color scheme. That's insane. So this is the CUNY Graduate School. Hey, Harvey says, hey, Tom, happy Friday. Likewise, man. Life, Liberty, and Guns says, I'm sick of the bear market. This bear market, I think, is very, very necessary. And I actually kind of hope this bear lasts well into 2023, maybe even Q4 2023. Because we have a lot of speculative excess that we need to sort of shake out of here. And I think that it's almost inadvertently built a lot of, I would say, unsound investing principles, especially to younger folks. And I think a very egregious bear market would do its justice to wash out a lot of the nefarious actors. So I think if we have a brutal 2 or 3 year bear market, I think that would be a long-term positive, not only for the economy, but sort of forces people to get back to investing basics and really understanding things, as opposed to just buying meme stocks. Hey, SoCal Lawrence. Good to see you, Lawrence. Thank you so much for the donation. Says thank you for the walk tonight. Thank you for being here. I appreciate it. Sometimes when I'm on Twitter, there's this particular Twitter account that's hilarious. I think you guys got to follow it. It's called Investing Fails of TikTok. Now, I don't have a TikTok. I refuse to download the app. I refuse. I don't want to really go off on a tirade what I think about TikTok, but I think you guys could probably guess. But I refuse to download the app. And some of the stuff that I see that's reposted by this particular Twitter account, I think it's called Investors of TikTok, is so egregious that I think it's almost borderline unethical. And I think this bear is going to wash a lot of that stuff out. I think it's going to wash a lot of that stuff out, which I think is necessary. I think there's an old saying from this particular book, and I think the book was Reminiscences of a Stock Operator, which is supposed to be based on the story of Jesse Livermore, that the markets tire you out, then they wear you out, and then shake you out. So if you have a lot of these buy the dippers, these AMC people, that if they just keep getting relentlessly hammered day in and day out, they're going to throw in the towel. Or if just the companies that they trade are just going to go bankrupt. And I think that's necessary, because from those mistakes, and I think they'll sort of come around and understand that what they're doing is a mistake. Life is very interesting, where you find your way into, learning how to do things the proper way. And I think that's going to be a net positive for an entire generation of investors. I think a lot of this stuff that has happened with the crazy liquidity that we've had sloshing around with COVID. It's just, I mean, looking at it, it's just like almost jaw-dropping at the nonsense. Hey, Jewel Mar. This is Health and Harmony Tom. I sent you an email regarding your 2 favorite museums, the Morgan and other ones. Thank you a bunch. Jewel Mar, I'm gonna spend some time this weekend to check my email. I've just been really, really busy, but thank you for sending me that email. All right, Herald Square, 34th Street. All right, I'll give you guys one more shot of the Empire. Wow, Dan Zhang, is that right? But if you guys sort of like the topics we talk about on the live stream, if you scan the QR code on your screen and punch in your email, oh, it looks like there's some sort of something going on over here. Punch in your email, you'll be signed up to receive my free financial newsletter. So if you want to continue the conversation, I write about not only the US equity market, but emerging markets, fixed income, and we're going to be getting back on a very nice regular cadence of sending that out. So please punch in your email. It's completely free. You'll be signed up. Mark Francis is honey, whiskey, and NyQuil. I may have to drop the whiskey, but I'm not sure if whiskey and NyQuil mix. Dude, that's hilarious. Oh my God. Oh man. So this is Herald Square, outside of the very iconic Macy's building. Where's my Z? Says Tom, can you give any recommendations on books about investment, etc.? Yeah, for sure. Excuse me. So here's what I would say. If you look at the newsletter, in my last newsletter that I sent out, I gave you a list of my top investing books. But I would read every single book by former mutual fund man by Peter Lynch. If you want to learn a little bit about like slim investing, I would read How to Make Money in Stocks by William J. O'Neill. He was the founder of Investors Business Daily. And Investors Business Daily actually just sold the News Corp. Ooh, look at this. I would also pick up this book by Phil Fisher. It's called Common Stocks and Uncommon Profits by Phil Fisher. It's probably one of the greatest investing books ever written.
Watch out, guys. Watch out, guys.
And I'm trying to think of any other ones. You know, I would read Seth Klarman's Margin of Safety. Now, you probably can't buy that book because there was only about 5,000 copies ever published. But there are probably some PDFs of the book online for free. So that is Margin of Safety by Seth Klarman. That's a very, very good book. Reminiscences of a Stock Operator is good. All of the Market Wizards books are extremely, extremely good. Now, the Market Wizards series is really interesting because Jack Schwager, who's the author, does a really good job at finding sort of, I would say this very loosely, but no-name investors that at the time really didn't have a big name, but Jack Schwager was able to verify their investment returns and then do very detailed interviews with them. So I would say the entire Market Wizard series is fantastic. So my two favorite traders out of the Market Wizard series is number one, Anthony Saliba. And I think that was in the first Market Wizard series. And Anthony Saliba is a derivatives or options trader, probably one of the greatest to do it. I think now he is since come out of retirement, and he operates a cryptocurrency derivatives exchange in Chicago. And then the next one is Mark Minervini. That was also a really, really good interview in the Market Wizard series. So those two are fantastic. But mainly from a valuation standpoint, if you want to know like the basics of valuation, I would say the best one probably ever written is Seth Klarman's Margin of Safety. That one's really, really good. All right, team. I do apologize. We do have to run. I got to catch the train, but thank you so much for joining me tonight. I appreciate everybody. I hope you all have a fantastic weekend. We will be live from New York City tomorrow at 8:30. So if you're new here, feel free to hit the subscribe button, leave a like if you enjoyed the live stream, and we'll see you back here tomorrow. So Samantha R, thank you so much. Cayenne Pacific, Joe Driver, Patrick New York, Mark Francis, thank you so much for the donation. Much appreciated. You're too kind. Paulette, love is kind. Thank you so much. Photos from around New York. Charles D, 3T3, Patrick, Abdullah, Muhammad, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. Everybody, have a great weekend. Take this time to rest, recharge, because we got a busy, busy week coming up on Wall Street as the continuation of Q3 earnings commences. Take it easy, everybody.